There's a template of what is happening. There's a story. In 1971, I was following the markets, and between graduating from college and going to graduate school, I was clerking on the floor of the New York Stock Exchange. And in that intervening period, there was a lot of aspirations, a lot of desire, and to go to the moon, to eliminate poverty, to make equality in the United States, and so on. So I went back and I looked in history, and I found the exact same thing happened on March 5th, 1933, except rather than the television and Nixon, it was the radio and Roosevelt, and he made the exact same announcement and it had the exact same effect. And at that time, I learned two big things. I learned that first, that many things that never happened in my lifetime seemed surprising at the time, and that I needed to study things that happened before my lifetime to understand them. So in that early era, when there was Kennedy, and that made me an optimism, but during that 10 years, the fact is that there was a lot of borrowing of money, a lot of deficits. Back then, gold was money, and money as we know it was like checks in the checkbook that would go get you the gold. You can turn in your paper money for gold, but gold was the real money. And because the United States had borrowed a lot more money than it had, it wrote a lot more checks than it had gold in the bank. And so on August 15th, 1971, when I was clerking on the floor of the New York Stock Exchange, I watched on television as President Nixon defaulted on the obligation to pay gold for the cash. He went on and he said, you won't get the gold. And of course, he didn't say it that way. He said it in a way where it sounded like there were speculators and so on, and he had to do it, but he didn't get the gold. And so on the floor of the New York Stock Exchange, I walked on the floor of the New York Stock Exchange, and I thought the market was going to go down a lot because after all, this is a big crisis. The money as we know it ends. And I couldn't have been more wrong. It went up a lot. And what happened was I never went through a currency devaluation before, because in my lifetime, there was no currency devaluation. So that's the first time it happened. After wars, people remember how terrible wars are and they want peace. All of those reasons produces peace and prosperity. And there's also a financial reorganization. But then that peace and prosperity leads naturally to the country that has that having the world's reserve currency. A reserve currency means it's the currency that's accepted. So naturally, the dollar is the world's reserve currency. Before that, it was the British pound during the British Empire. Before that, it was the Dutch guilder. It's the same pattern. And so, and there's peace and prosperity with the world's reserve currency. Now, when you have the world's reserve currency, the rest of the world wants to save, and they save in that currency. And that leads the country who has the world's reserve currency to borrow. It gives them what's called the exorbitant privilege of being able to borrow and print the world's currency. Boy, that's a good thing to have. And then what they do, of course, is as prosperity continues and asset prices go up, like stocks go up and everything does really well, it encourages more borrowing and spending and betting on prosperity. And that begins to have a rise in levels of indebtedness. So you see debt levels rise. And the third thing it does is it creates greater wealth and values gaps. They become greater naturally. The wealth that's built up is distributed unevenly. And those who make a lot of money then begin to have a larger wealth gap. And that creates also an opportunity gap. If we're lucky enough to have the money, we can educate our children well and so on. That gives them an unfair advantage as in relationship to others. And so this wealth gap increases at the same time as levels of indebtedness increase. And then, of course, what happens is the competition increases. And certain things are happening. Like right now, there are certain things that have never happened in our lifetime before, but happened many times in history. So in order to understand them, just as you said in the beginning, I need to understand the patterns, and even more than the patterns, the cause and effect relationships behind the patterns. So that mistake taught me that I needed to understand history. And each of the mistakes has taught me. I made a big mistake in 1982 I won't take you through it because it just probably take too long. But in other words, a big mistake in '82 when I calculated that foreign banks, American banks had lent more to foreign countries than those countries were able to pay back. There was a big debt crisis. I anticipated this debt crisis, Mexico defaulting. Great, okay. But what happened is the economy, and I expected there would be a terrible economic situation. And you know what happened? The Federal Reserve printed a lot of money. You know, you learn the lessons, okay? Those lessons that I learned let me study the 1929 to 32 period, which allowed me to anticipate the 2008 financial crisis. And make a lot of money there when most people lost money. And right now, what's happening now has let Bridgewater and us to make a lot of money while the markets are behaving badly now, because the same thing happened in the past. An order is the system that's operating. How do you operate? So, for example, there is a domestic order. In the book, I measured 18. So that way you can watch the objective numbers. They're all measurable. Just like if you have a blood test and urine analysis and all of that other measure, you have measures. And the reason I need objectivity to be accurate, but also by being able to measure those things, you could see whether you're improving or not. So it's a type of biofeedback. But yes, you're right. What it starts with, for example, is good broad-based education. It starts with education. Educated people are more valuable, and there's two types of education. There's education of like what you know and what skills you develop, but there's also learning civility, learning how to behave with each other. How do you behave with others to make a productive society? And so related to that, as we think about that, think about parenting, think about the importance. Really, what I had was just going back to the basics. What I had was parents who loved me and were good guidance. I went to a public education, and it was public school, and it was a good public school. And I came out to a world of equal opportunity, in which there was an opportunity to make decisions and make things happen and then live the American dream. The competition increases because when you win and you have the other Germany or Japan or other countries destroyed after the war and there are no other competitors, then it's a dominant position. But with time, others learn and begin to build up, like China particularly has increased its per capita income and its competitiveness. And so China is a competitor with the United States, but all through that time, it was like the British were competitors with the Dutch and so on. So we see that pattern happen over and over. As that power gap narrows, then conflicts about how things should go increase. And internally, there is a conflict over wealth and wealth gaps. And then there's a higher level of indebtedness, which makes for a worse set of circumstances. And that combination of circumstances leads to more conflict and more problems. So traditionally, you see that if you have a lot of levels of debt, the classic way that you see this is, what does a government do when it doesn't have enough money? It's not like they go into the coffers. The coffers are empty. They have no gold. They have not that money. So where do they get the money? They have to take the money from somebody else. That's either through taxes, or what they do people get angry when they're taking it away and there's a big fight over it. So what they usually do is they print money. And through the Roman times, back in Roman times, they had gold coins. They put less gold in the coins. They put other metals in the coins. And inevitably, they print money when they want to spend more. And that, of course, produces the inflation. It devalues the value of money. And you lose buying power. And when that happens, at the same time, there's a large wealth gap. An opportunity gap that produces a lot of internal conflict of the sort that we're seeing now.